Hello, everybody. I'd like to wish you a good evening or a good afternoon, wherever you are. Firstly, I'd like to welcome you to this webinar where we'll be talking about the US company earnings season and the opportunities it represents to traders. We'll also talk about what happened in the last company's earnings season in April and the prospect for July's earnings season in what promises to be a very good set of results for many companies. My name is Sasha, and I'm a financial analyst from the research department at ForeTrade, and I'm delighted to have you with us. If you have any questions, I will do my best to answer them, or please call us and ask to speak to a senior account manager who will be happy to help. Before I go any further, please take a moment to read our risk warning and disclaimer. I'm sure you know that although gains can be made trading CFDs, losses can be incurred too, and you need to be aware of this. Now, we would like to present our new offer that is exclusive to those watching this webinar. A special code will appear on your screen during the webinar, and I will repeat this code at the end of the webinar that you can use to take advantage of our special offer. Be aware that this offer will expire in 24 hours, and that this new offer applies to all of you, not just second-time depositors. So stick around, it will be well worth it. If you make a deposit within the next 24 hours, you can receive a balance bonus. If you deposit €1,000, you will receive a 2% balance bonus. Deposit €2,500 and you will receive a 4% balance bonus. Deposit 5,000 and receive a 5% balance bonus. Deposit from 5,001 to 15,000 and your overnight interest rate will be covered for 1 month. Deposit 15,000 to 25,000 and your overnight interest rate will be covered for 2 months. Deposit more than 25,000 and your interest rate will be covered for 3 months. You're free to use this bonus however you choose, but you might find it beneficial to use on one of our market opportunities. What is a market opportunity, you might be asking? A market opportunity is a one-page briefing containing market analysis, and our goal is to provide you with a simple-to-understand opportunity to trade in the markets. We will select an instrument such as gold or a currency pair and tell you our very best estimate on its price direction so that you can trade on it if you want to. Market opportunities are produced by us at the research department on a daily basis according to market conditions. A market opportunity consists of fundamental analysis, geopolitical events, and technical analysis that includes a pivot point and support and resistance levels. And what you can see in front of you is an example of a market opportunity. You can see fundamental analysis on what's going on with the pound-dollar currency pair. Below, you can see some geopolitical events that can influence the currency pair. It's important to look at the pivot point on which the calculations are based. You can see encircled in blue on the center left-hand side of the screen. If the price reaches the level that you can see, that says 1.3080, this shows the right moment in our estimation to come in and open a trading position. You can see that this one is a weekly market opportunity, although we also have regular daily opportunities. You can see the trend direction here, which is up. It's important that you know how to use the stop loss and take profit options. You also have support and resistance levels outlined here. At these points, you can put a stop loss and take profit. And on the other side, on the top right-hand side of the screen, you have calculations. If you close the position using take profit, you can expect those kinds of profits you can see in green at the resistance 1, 2, and 3. If the price is going against you, then you can potentially have a loss of this amount at support 1, 2, and 3, and that's in red. The pivot point then is the starting price for opening a trading position. Support and resistance levels here are for daily, weekly, or monthly terms. Finally, profit and loss calculations are based on a one-lot trading volume. So let's get into it. What's the earnings season and why is it important to traders? The earnings season are months of the year when a majority of quarterly corporate earnings are released. Earnings season occurs in the months immediately following the quarter ends results of the year. So that means earnings seasons fall in January, April, July, and October. For traders, this means that almost every large company on the market will report their results in these months. And depending on the results and previous expectations of analysts, this can have a great effect on the prices of the stocks you trade with, and is therefore a great opportunity. As an investor, you should also keep an eye on analysts who will give valuations which will state whether the current price of a stock is overvalued or undervalued before the earnings season begins. So, when do the big companies report? Well, Microsoft will post at the end of this week, on the 19th. But the busiest week will begin on July the 23rd, when Google, Boeing, Coca-Cola, Facebook, Amazon, and General Motors will all post their results. You can also see here Amazon, Intel, and Apple will also be reporting in the same week. That's the 26th for Amazon and Intel, and for Apple, it's the 31st of July. So yes, the earnings season has begun already. It's already kicked off with mostly smaller companies starting first. Of the larger companies, major banks reported first on July the 13th. So Citigroup and JP Morgan reported last Friday. JP Morgan had a very strong quarter, posting better than expected revenues and earnings per share. The company also posted record second quarter profits of over $8 billion. JP Morgan's stock price then traded higher, but by almost 1%, before ending down 0.48% by the end of the day. Citigroup results were mixed, posting lower revenues than expected, but earnings per share were higher than expected. The company's stock price finished down on the day by 2.26. Netflix, a big one, reported on July the 16th. That's yesterday, after the markets closed, with mixed results. Revenue was below expectations, although earnings per share were better than expected. However, subscriptions were lower than expected, and Netflix stocks, which have been riding very high recently, ended down by around 9% today when the stock market opened. Despite some mixed results so far, most investors remain optimistic that many companies will post better than expected results, which they believe will positively affect market sentiment. So what happened last quarter? Well, the last earnings season, which began on April the 12th, or around April the 12th in 2018, mainly relate to data from quarter one in 2018, was record-breaking for most companies. And over 80% of S&P 500 companies recorded above expectations earnings per share. One of the most popular shares, Amazon, for example, reported a huge earnings beat in April. Sales were $51 billion, up by 43% year on year, and net profit was $1.6 billion. On that day that Amazon reported its results, its after-hours prices traded 7% higher. Tesla, another example, their first quarter earnings for 2018 saw the California-based carmaker beat Wall Street revenue estimates after posting $3.4 billion in revenue and beating earnings estimates with a loss of $568 million. Following the news, Tesla stocks grew by 1.6%. But for those of you that follow the markets more closely, afterwards, during an earnings call, by CEO Elon Musk dismissed questions from analysts, which actually didn't impress investors. And Tesla stocks declined 5% in after-hours trading. Facebook, to give you a third example, reported a beat of quarterly earnings and revenue, which were well above expectations, with revenue of $11.9 billion versus the $11.4 billion expected by the Thomson Reuters consensus estimate. Some of you, I'm sure, will be aware that Facebook was involved in a data privacy scandal with a firm called Cambridge Analytica. It was expected that Facebook's stock price might suffer as a result. However, since these positive results were reported, Facebook stocks have jumped to record levels of over $200 per stock. On your screen, you can see Thomson Reuters' past, current, and future estimates of earnings growth, which are listed by sector. The energy sector, then, is due to show the highest earnings growth, as you can see, followed by materials, the tech sector, and financials. It's a similar story with the future revenue growth rates, with the energy sector predicted to do best, followed by materials and the technology sector. The utility sector, by the way, will have the poorest results according to both charts. So what do we expect this quarter? Well, Goldman Sachs have advised clients that investors should focus on stocks with high and stable gross margins. Many analysts expect to see another strong earnings season, but it's important to keep in mind that positive market sentiment has been affected by the real prospect of a trade war. Another factor to bear in mind is that it might be sensible to trade in stocks that are not exposed to trade war concerns, while chip makers such as AMD or stocks potentially like Apple, which rely on the Chinese market for production of goods or sales. Companies that are largely internet tech firms such as Amazon, Facebook, or Netflix stock prices might perform better in the long run, in particular in the event of a trade war. But the real issue is that while tariffs pose a risk to market sentiment, the potential impact to aggregate S&P 500 earnings per shares is limited, since exports to China total only 1% of US gross domestic product. Having said this, analysts expect earnings at companies in the S&P 500 will register an increase of 20.7% from a year ago, according to Thomson Reuters again. That would be the second best gain in over 7 years. Bullish sentiment on the earnings season is due to the general strength of the US economy and to President Trump's tax reforms. Okay, so we will be following the earnings season closely. So please get in touch with your senior account manager for any further information on the earnings season. In case you missed the promo code during the presentation, this is your opportunity to take advantage of our special offer, which will last for 24 hours. The promo code is FTD1X. We feel that it's a great option to use this special offer on the NFP or the earnings season and trade using one of our market opportunities, but the choice is yours. And of course, we at ForeTrade will be following the earnings season and its impact upon stocks very closely. If you have any questions or want to take advantage of the trading opportunities that this season will present, again, get in touch with your senior account manager. Until next time, goodbye, and please join us again at ForeTrade soon.